you?
Oh, hello, Simon. Yes, I'm very well. Well, actually, I should say I'm bloody awful.
What's
I've got
happened?
nothing to complain about. Everyone I talk to, I've got something to complain about. I don't really complain about, so I'm bloody awful.
Well,
Uh,
hopefully that'll get people's attention. Huh? They really want to listen now to your pearls and wisdom. So, welcome back to our expert investor interview series. This is our third chat, and lovely to catch up as always. For those of our viewers who don't know who you are, you're a well-published author, 5 books on investing, particularly focusing on share investing and online share investing. You've got a fantastic website, which we will get to at the wrap up. Love to hear your thoughts and wisdom as always. And the fact that life's going really well for you, then I'm sure we can get some good information and get some tips. How's
well,
that?
touch wood so far.
I hear you. So I guess if we start with the increasing availability of information and online tools, do you think it's easier or harder for individuals to make informed investment decisions? Is it a blessing or a curse having so much at our fingertips? And we talked about this a little bit in the previous chat as well about the amount of free information.
I think it's a double-sided sword, this one, because it's both easier and harsher. Now, it's easier in terms of you can access a hell of a lot of information very easily.
Mm,
It's very easy, and it's amazing, a good factor. But it also means that it's harder in the sense that you can become bogged down. Or in fact, you can't even, before you even start your studies, oh, there's so much here. Where the hell do I start? For example, if you look at the market and you say, oh, I've got to pick some shares to invest in, there's over 2,000 listed shares. And you think, well, how the hell am I going to choose in that lot? Find the gems in that lot.
right.
And then you go on site and you said, like I said in the previous interview, there's about my charting site's got about 70 technical indicators you can access. And you say, well, gosh, which ones am I going to use? I can't use them all. What am I going to focus on? And you can get just bogged down. So my my suggestion is that you've got to focus on the key ones. You've got to decide what are your key ones, and you've got to focus on those. Now, when
Right.
it comes to fundamental analysis, my key ones are, first of all, the share price is going up, or has got not falling.
Mhm.
Uh, that the company has made good profits over a number of years, that they have a reasonable price to earnings ratio, which means they're not excessively priced, they're not priced on high, which is what I don't want to avoid companies priced on hype, because hype
Okay.
can get carried away. I mean,
Yes.
that tulip money, everything in Holland, where people were selling their house for a tulip bulb. I mean, people can
Insane.
get caught up in hype, and just when you look at a company that's got a huge, very high PE, you say, well, the share price is based on hype. It's not based on solid earnings. So I look
Yeah.
on their earnings growth, and,
Yes.
and I look also at the dividend. Now, a lot of people say, oh, well, dividends aren't important. In America, they don't pay very good dividends. And, you know, but to me, when you buy shares in a company, you are becoming an owner of that company.
So true.
Now, as an owner of that company, I believe you're entitled to share in the profits.
Yeah.
Right?
Makes
Now, I think that's a reasonable expectation. You can say, well, the company's there to make profits. As an owner, I should be able to get a share of those profits, which means the company should fork out to me a reasonable dividend. They should give me some share of those profits that they're making. And so I look for you. Now, shorter term investors might disregard that and say, well, I don't care about yield, that's my capital gain. But I think I want to look at that yield because to me, not only is that indication of the company giving the investors something back, but it's also for me an indication that the company must be making good profits in the first place.
Yes.
Otherwise, they wouldn't be able to hand anything out to the shareholders.
Very, very good point.
The
Absolutely.
company profits go down, the dividend gets cut.
Yes.
So if they've got a good, steady dividend, it's a good indication they're making a good, steady profit.
It's a
So
signal.
let's look at that too. So I
Yeah.
look at they're some of the ones that I focus on.
Right.
And There's something much out of all that water of information. I just focus on those key ones. And if I'm
Yes.
buying a new share, that's what I'll do. I'll focus on. I'll
Yeah.
look at the fundamentals and say, is this company
Yeah.
making money? What's their track record with regard to making money? And what's the PE? Are they based on hype, or is the share price realistic? You know,
Yeah.
and
Basically.
that gives me a good indication, and where I can decide whether or not I want to buy that share. So you don't look at you don't get caught in the woods, in all the trees. You just look at the critical factors to separate the wood out from the trees. Now, I do the same with my technical analysis. I focus on a few key issues. The first thing I look at is how's the share price gone over the last. Well, I use several time periods. First place, I'll use the last 6 months, because that's where the most recent action has been. Then I might check it back over 2, 3, 4, 5 years, see how the share prices has got over that period of time. So I'm basically looking for something that's got a sound track record with regard to share price. So I look at
Yes.
the share price, and I look at key fundamentals. I use moving averages. I am a great believer in moving averages, and in my books I explain moving averages, and I use
Yeah.
multiple moving averages. I
Yeah.
also use the MACD, which I think is moving average convergence divergence, which I think is a very good tool.
Yes.
It gives you an indication when to buy or not, whether to buy
Yes.
or not,
Turning
whether to
points
sell.
and
And
turning
I
points.
also plot Bollinger Bands. I look at the Bollinger Band, it's up right at the
Yeah.
top of the Bollinger Band. They're showing where they're going to go down. If they're at the
Yeah.
bottom, you've got to watch when they break away from that Bollinger Band, because that could be a good time to buy. So
Yes.
I separate out and I've got them in the book, the ones that I focus on. So
Okay.
out of all that welter of information, I pick the key ones that I'm interested in, and they're the ones I focus on. So I don't get bogged down. So
That's
that's
a
what I
great.
think investors got to do. You've got to decide what fundamentals are critical for you, and what factors in the charting are critical for you, and focus on them, and don't get bogged down in all the other stuff that you can get
Yeah.
bogged down.
I think really good
Well,
points, and yeah, picking the stuff that works for you. And I suppose there's a few core principles, like some of the things you mentioned. The trend following approach with looking at prices, but also starting with a sound fundamental approach with some of those things you talked about, reliable dividends and profit history and so forth. So you mentioned price earnings, and that's obviously a very common ratio and screening tool to help select investments, and how some stocks can get very high price earnings, and the hype and the blue sky, if you will, overexcitement. So it leads me to the next question, about what role do emotions play in investing, and how can an investor manage those emotions to avoid making those impulsive or detrimental decisions, and stuff we talked about previous chats as well, right? The whole emotional short circuiting of the plan, so to speak. What are your thoughts?
well, as I said, we're dealing with humans, and humans have got emotions. We can't get away from it.
So true.
All humans have got emotions. Now, some people show their emotions more than others, and some people are more emotional than others. Some people are more dispassionate. I go to a card group once a week. We play cards and have a bit of fun. And some people there are totally dispassionate. They sort of don't let on, by their faces, whether you know how they're going or how things are going. They've got, other people are quite emotional like me. I tend to sort of wear my heart on my sleeve, sort of thing. But but emotions, whether or not we like it, emotions do play a part, because we're human beings. Now, what we can do is we can get carried away with our emotions and make irrational decisions, and that's where it's bad for a share investor to get caught up in those emotional decisions. Now, the main emotions obviously is the desire to make a profit. We're all in the market because we want to make a profit,
Yeah.
and secondly, we want to try and avoid loss. Now, the emotional side of humans is that we hate taking a loss more than we enjoy getting a gain. So investors will pretty much do anything to try and avoid that loss and taking that pain of that loss. So that tends to influence our decisions too, where we find it's harder to sell especially when the share price has gone down, because we don't want to take that loss. We don't want to crystallize that loss. And this played a huge part in a lot of share investors. So the best way a share investor can avoid getting caught up in the emotional side of investing is to sit down dispassionately and write out the criteria that they want to follow.
Right.
And then what they've got to do is they've got to stick to it.
Yes.
Right? It's like somebody saying, right, they're overweight, they're eating too much, but the best way they're going to lose weight is not any crash diets or anything like that. They've got to sit down and say, rightio, how many kilojoules can I afford, am I burning up? How many kilojoules do I want to take with food intake? And then sit down and work out a plan. So you say, rightio, I'm going to balance my intake to my output. But I've got to have a little bit less input. And you've got to be disciplined about it.
Yes.
You know, you've got to not let your emotions get in the way. You've got to be absolutely disciplined about it and follow it. If you follow that, you'll have success. You will lose weight if you set yourself up a sensible eating plan.
Yes.
Nothing ridiculous, no crash diets, just a sensible eating plan.
Yeah.
So you balance your intake to your output, and then if you want to lose weight, you can cut the intake down a little bit. And over a period of time, you'll achieve your goals. So it's the same with share investing. You've got to sit down and work out what your goals are. What am I planning to do? What do I expect to get out of the share market?
Yeah.
And then you've got to set your goals on your individual shares and say, right, this share, as I said, I don't use stop losses, automatic stop losses. I set stop losses in my mind. I write it down on my spreadsheet.
Yes.
I write down what my stop losses are going to be. So I say to myself, right, if this price gets below such and such a value, I'm going to sell. And then you've got to be dispassionate about it. You just got to not let your emotions get hold of it. Get hold of it and follow that plan. So that's the only way you can really overcome your emotions is to have a plan you've thought out in cold, hard time of day without getting involved in emotions and hype, and just sit down and work out a sensible plan and stick to it. That's the important. Anyone can make a plan, but you've got to stick to it.
Stick to it.
If you can stick to your plan, then you're much better off.
Yeah, I think
I try and do nowadays. I don't always do it. I still get caught up in emotions sometimes.
That's right.
I do try to stick to it, and I do most of the time.
And that's a great outcome is understanding that there are going to be days when it just doesn't work, and we're humans as we've been saying, but to try to treat it like a business per some of our previous chats, remove the emotion, have a system that works and can be repeated and is robust and survives most, not all, because that's impossible, but survives most circumstances, whatever that system might be. And what I think is great about what's available in Australia for investors is, again, some of the amazing news.
Yes, I think the most critical two things are avoiding hype.
Yeah.
In other words, getting over enthusiastic just on the sake of the hype of it, or getting unduly pessimistic, which means panicking. And when people panic, they hardly ever make good decisions. Panic is the worst thing you can do in any situation. So if you're thinking of, you start to panic about your shares, you say, oh, this share price is going down again, and you start to panic about, make yourself a cup of coffee, sit down, look at the chart, look at the fundamentals of the side. Right, is this share really not going to do much good? Or am I better off to sell it? So you want to be, you want to try and avoid the hype and avoid the panic. So you find Trump, when he became president, he issued his own currency, his own cryptocurrency. Not only that, he did the same for his wife.
Hey Roger, did you see the sign on the door when we came in?
Thousands of dollars. Based on what? What's it based on? What's backing it? I mean, what are you actually getting if you invest 50 grand in Trumpy's cryptocurrency? What are you getting for your 50 grand? And the answer is nothing. It's basically purely on hype. And that's what I invest in cryptocurrency, because I don't get caught up in hype. I say, no, I'm not going to be part of that. I'm not going to be part of the hype. And I'm
That's
not
the
going to
greater
panic.
fool theory.
Right? If the share
Greater
price
fool.
goes down, right,
Yeah.
look at it dispassionately, decide, right, is this now no
Yeah.
longer a good investment, and sell out.
Yeah, no, it's a very good point, and that's the greater fool theory, hoping someone else will pay more than what you paid, and it's not a sound investment strategy. Usually doesn't result in good outcomes in the long term. And you mentioned before about goals and knowing what your goals are when you go into this arena of investing and picking stocks and building a portfolio. And most people, the starting point is obviously a financial goal, but beyond the financial returns, what other factors would you consider, or do you consider when making investment decisions? So around possibly ethical considerations or social impact, is that something that's important to you, or tell me about that?
Yeah, look, my battery is just about going down. How much time have we got? We're just about finished, haven't we? So
Yes,
but
yeah,
my
last
battery is
question.
just about running out.
Okay.
Yeah, I certainly think that as human beings, we have an obligation towards the planet and towards others. And so I think that although the investors always trying to make money, at the same time, I think they've got to be able to sleep well at night. And you've got to think about the ethical considerations. So, for example, I won't invest in a company that's in the coal business, because
Yeah.
coal's the best still available, and I'm not going to aid and abet a company that's in the coal industry. I try
Yeah.
and avoid companies that are in the fossil fuel industry. You know. But I do have a few shares in Woodside, but not many. I don't have
Yeah.
many, you know. So
So
I try and avoid the companies that are, that obviously aren't ethical, and don't have ethical values, and they'll operate in a manner that's going to aid greenhouse gases or going to harm the environment. I try and stay away from them.
okay.
But I think you've got to sort of think you're partly responsible as an investor for the future of the planet, and that you should try and do things which you've got.
That's
Uh,
great. Makes a lot of sense, and you've got the power as an individual investor to vote on those issues with where you invest your money. So, on that note, just to wrap things up, Roger, I just want to can you see the website on the screen?
I
Your website?
can indeed, yes, I can
Yeah.
indeed, Simon.
There we go. So for our viewers and listeners, this is Roger's website, and you can buy his books here, or I guess where any good books are sold. Roger, is that fair to say? Amazon, etc.
Yeah, and I've also got some blogs on my website that people can read for a charge. So you've got just ideas I've had over the years. I put down a few blogs.
Yeah, brilliant. Yeah, there's some great stuff there. So, Roger, thanks again for your time today. Looking forward to
Oh,
chats.
it's been a pleasure, Simon. Thank you
Okay,
for inviting me, and I've enjoyed it.
awesome. Talk to you soon. Thank you.